to watch. Joining us now is Saira Malik, Chief Investment Officer at Nuveen. And Saira, it's great to have you on. Obviously, we've had some policy flux. It's less than a week ago. We had the tariff situation scrambled. We've been on this kind of Iran, Mideast hostilities watch. Are those the things you have in mind in terms of what the market's trying to digest?
Yeah, there's four themes driving market volatility this year, and I think they'll continue. And that's trade, artificial intelligence, the Middle East situation, and what will central banks do. I mean, just starting with the hot topics of today, the AI trade and the Middle East situation. First with AI, we're seeing this shift from semiconductors to software within the tech sector. Software was actually quite underowned. In portfolios across the board, it was about at 100 to 150 basis points underweight. So now you're seeing this shift where people are rushing in back to buy software while they question NVIDIA's results, which were terrific, but not good enough for the markets, and whether this AI spending can continue. I do want to point out from a political point of view, if you look at history, during years where there's midterm elections, markets tend to have a lot of intra-year volatility. On average, intra-year, markets decline 18% at some point during the year, during a midterm election year. That doesn't mean it ends up that way, but it means we're going to be in for some volatility likely.
Yes, certainly that has been the pattern, although I've also seen some work that in midterm years, when the Fed is not raising rates and you obviously have the economy growing as it is currently, you tended to avoid a lot of the bad downside outcomes. So what do you think we should expect from the interplay of the economy and the Fed? You're starting to see market-based expectations of potential rate cuts into next year, and some are interpreting that as maybe we get this macro shock from AI on employment.
But we agree that the Fed will probably cut rates this year. Our call is for 2 rate cuts in the second half of this year. But, the narrative on Warsh, some people are worried that he is a inflation hawk. I think what he is he's a productivity bull. What he believes, it seems, is that productivity will be accelerating, and that will help keep inflation at bay. And the weakening in the employment markets will give us that room to cut rates. I think that's positive. But the issue for the markets is around the geopolitical issues. We saw that today with the movements in the Middle East. If we can get to more of negotiations, I think that'll be positive for the markets. But the more tension that is created in the Middle East is causing oil prices to rise. We have to worry about the Strait of Hormuz, which accounts for 25% of oil exports, and what that could mean for energy prices and the global economy.
How do you think, though, Saira, about productivity in the markets overall and the impact from AI and how much it's going to drive? Because the market is assuming that AI is going to be so effective that we're going to be much more productive and we won't need as many people. And I'm wondering if that's sort of filtering into how you're viewing certain sectors.
Well, the market is certainly worried about that. We've moved from who are the AI winners to which sectors are the AI losers. And we're seeing markets basically shoot first and ask questions later. Seen that with the software sector, areas of financial services, healthcare. I don't think it's going to be as extreme as the markets are treating it, but AI is going to have an impact on areas of the economy which have lots of data, because that's where AI really accelerates. Tons of data in healthcare, financial services, all of that could be replaced by AI. But I think the real win on AI is going to be humans working hand in hand with AI. So I don't have the view that AI is going to completely destroy some of these sectors. I think that's why you're seeing software up for 3 days in a row, because it was overdone.